Coming up in today's show, U.S. national debt has crossed $33.5 trillion, and the government's huge borrowing plans have helped fuel a historic rout of Treasury bond prices, pushing yields to the highest level since the global financial crisis. All of this is raising questions over whether there are enough buyers for all of this debt. But now there's a new source of demand. Can tokenized treasuries prop up the market? Speculation that a Bitcoin spot ETF approval is imminent is fueling the Bitcoin rally. So what's next for Bitcoin, and which altcoins are coming along for the ride up? And turns out one of the biggest holders of Bitcoin is the US government. Here to talk about these topics and more is Ken Olling. Ken is the founder and CEO of MELD. MELD is a non-custodial DeFi protocol for Web3 finance. It offers cross-chain lending, borrowing, staking, and integrated banking services via MELD Finance on the MELD blockchain. And Ken is a serial entrepreneur with more than 20 years of experience. He specializes in digital transformations and has delivered innovative products for companies around the globe, including GE, Audi, and Visa. Ken, great to have you back with us on Kitco.
Thanks. I'm happy to be here, Michelle.
All right, as I said, those are some of the topics we're going to unpack, but let's start off with the Treasury markets because we've seen a significant shakeup there in the US government bond market, the 10 and the 30-year bonds climbing to their highest peaks in over a decade and a half. The yields there, they have reversed since then, but the market's been on edge, especially following some turbulent bond auctions recently, not showing the strongest demand. Now, we know that US debt has just crossed $33.5 trillion, and there's growing concern over not only servicing that debt with such high interest rates, but whether there are, in fact, enough buyers for all this debt. At the same time, though, we do have very high interest rates that still keep treasuries looking very attractive. And as it turns out, there is now a new source of demand, which could be a pretty significant deal for the treasury market. And that is the idea of tokenized treasuries. And according to the data from RWAs, that's a platform that monitors real world assets, the value of these tokenized treasuries has soared to $698 million. And that's up from $100 million at the beginning of this year. So quite a dramatic increase in the tokenized treasury market. Let's unpack that, Ken. And let's start with you explaining what a tokenized treasury is.
So tokenized treasuries, it's a pretty simple process with one complicated component in between this to make it a bit challenging. So effectively, you have a bond or you have a piece of property or you have a US Treasury and it's held in custody, and then you tokenize it. You break it up into smaller pieces and turn it into tokens that can be traded, bought, and sold. The trick here is the legal framework involved in the custody or holding that asset, or basically connecting those tokens that are out in the open market back to the treasury. So these are some of the challenges that a lot of businesses have been trying to solve over the past 18 months. And we're now seeing a lot of the fruits of that work come to fruition, where you have tokenization of real estate on a scale that we haven't seen. And you're starting to see the tokenization of US Treasuries. You've already had many bond issuances as tokens. And now we're starting to see an appetite in the market, both among private investors, but also among institutions. Institutions see it as a method that is more efficient than the old way of going about it. Their assets are more liquid. They can trade them on more markets more quickly. And private investors see the value in getting access to assets that they've never had access to.
All right, let's unpack that a little bit further. So when you tokenize a treasury, I mean, what does that mean? Does that mean that you are buying a token that represents a US Treasury? Is it somewhat like a spot ETF that they have to own the underlying asset? What does that mean exactly?
Yeah. So when you tokenize an asset, you have to be in custody of that asset in one way or another from a legal perspective. And then once you have the custody of it, you have the right to be able to break it up into smaller pieces. Some people break it up into lots of very small pieces. Some people connect it to big elements. So, for example, if you have a $1,000 treasury bond, then it'll be broken up into $1,000 units. But you can also break it up as small as dollars and cents. So it's up to the person who's breaking that traditional asset up into the pieces, how they do it. But effectively, they are in control of it. And then they issue tokens based on a specific set of contracts that other people can go and buy, or they can hold themselves. And when you own that token, then you have partial ownership of that underlying asset and partial ownership of the underlying yield of that asset.
So in the case of a US Treasury, you get the interest payment that the US would be paying on its debt. You get
Correct.
It via the token.
Yes.
Okay, so why not just buy a US Treasury out front? Like, who is this supposed to appeal to?
So that's kind of one of the big questions. US Treasuries are ubiquitous around the world. They're more or less easy to get a hold of. I think that the big value proposition here has more to do with the kind of generation that we're starting to see grow up that are very native to digital. It's much easier for them to hop on their phone and get access to these treasuries sitting in a cafe and decide that they want to invest some of their salary into US treasuries, rather than having to go through this very, very high friction process where you go to the bank and you have to sort of deal with either your accountant or your financial advisor. So it's an ease of access, it's an ease of use, a convenience, more or less, when it comes to a lot of people. But in some countries, it's just very difficult to get a hold of treasuries. In some countries, you might not be able to get them at all. Even though technically you can, they just might not be offered. And so when it comes to the tokenization of it, especially if it's available to everyone on a global basis, only based on doing KYC, then that really is a huge game changer for people that are looking at, okay, I have these dollars, I can put them into a bank account and I can get 0 interest. Or I can put them into US Treasuries and I can get 5% interest. And if they're liquid and I know I can get that sort of cash back whenever I need to by selling it on the market, that can be a huge game changer. Yeah.
And I would imagine, Ken, that you're able to use a local currency, convert it into a stable coin, or even use that directly to purchase a US Treasury. Like if you're in Argentina, for example, and you're seeing the tremendous devaluation and depreciation of the Argentinian peso, and you want to preserve the value of your money, I would think that buying a US Treasury, a token of a US Treasury, is a pretty smart and efficient way to do that. How would that process work?
Yeah, so this is kind of one of the things that MELD is very focused on and what we're trying to do. Rather than having a bank account where you keep your money in a bank, you have the bank account, which is the actual blockchain itself. If I hold dollars in a bank, I'm not going to get any interest on that. If I hold dollars on a blockchain, I can quickly, efficiently, almost instantly convert that into US Treasuries and start earning a yield and convert it back. If I need to get, Argentinian pesos, then we can go through the FX transaction and you can convert those dollars into pesos, either with your debit card or into your bank account when you need them. So this idea of having your assets on the blockchain so you can use them in the most efficient way, whether it's to treasuries or investing in interest, in bonds or in real estate, whatever the yield kind of and risk level your appetite is set for, that's really the huge value proposition that tokenization can bring. The challenge we have is that right now, people are very scared about what the SEC is going to rule on it. So almost no tokenized assets are available to normal people. They're only available to accredited investors.
All right, well, before we get into the whole accredited investors angle, let's focus a little bit on the regulation, because who is confirming that this token does, in fact, have a real treasury issued by the US government backing it?
To date, right now, the companies that offer this, the way that they do this is they simply provide the prospectus for whatever that tokenized asset is, and then all of the risk is on the investor for them to go through these prospectus and make sure that they're getting what they're supposed to be getting. So to answer your question specifically, there isn't a lot of regulation. It's very, very gray as to how and what is backing that. And a lot of it has to do with you doing your own research or making sure that the reputation is very high, or maybe in some cases the people issuing the tokens are going to have some sort of license registered by the government. But that doesn't guarantee anything. I mean, you had FTX and Celsius and BlockFi, they're all licensed by the government as well, and you saw what happened.
Right, but given that this is a US government product, is there any coordination at the moment or any coordination being discussed between the US Treasury and companies that are offering tokens of treasuries, any way for a consumer to feel more assured that this does in fact represent a US Treasury?
Yeah, right now you have to do your own research, and you have to make sure that all the risk is on you to make sure that what you're buying actually has that underlying asset. So it's still very much the Wild West.
Well, Ken, I would think that if you are the US government and the US Treasury, you want to expand your offering because you do have a heck of a lot of debt to get financed. And there's certainly a lot more debt coming. So I would think it would make sense to coordinate with companies, reputable companies that are tokenizing treasuries, and create broader access to this market. I mean, does this not ultimately serve the interest of the US government?
To some extent, it can. Remember, the largest holders of treasuries are sovereign wealth funds and other governments, right? So I think it's like 30% of foreign reserves are held in US treasuries or US debt. And so I think that on one hand, yes, you get access to a much bigger market, but on the other hand, that market is going to be much more quick to sell off the treasuries in a short term, which is something that is going to be harder for the US government to handle. Mm-hmm. I think that the real challenge is that inside the US government, from what we can see, we don't know, they just don't have a position. They really don't know what their take is on it. And so this creates a lot of anxiety with companies that are tokenizing these assets. They're really tiptoeing around, making sure that they're not going to get themselves in trouble when eventually the regulations do come down the pipe. But right now, you're not getting a lot of support from the SEC or the regulators in regards to the treasuries, just because it's such a new thing and it's kind of following a different path than all of the traditional instruments that they're used to regulating.
Right, but the tokenization trend at large is growing dramatically with a whole range of assets. I mean, we know we've got certain banks tokenizing some of their deposits for easier access and for more clarity on the blockchain. Let's bring it back to this idea of accredited investors, Ken, because one of the pluses of tokenization is that it allows for the democratization, if you will, and broadening of entry of access to certain asset classes, right? It removes the barrier to entry and allows for more people to get access to a different range of products and to also get access to a fraction of those products. If you don't have the whole chunk of money that it takes to buy a treasury, for example, you can buy a fraction of it and still benefit from it. So I would think that this would have broad-based retail investor appeal for not necessarily accredited investors. Why is it only offered to accredited investors at the moment?
Yeah, this was the surprising thing when we started working with real-world asset and tokenization providers about a year ago. Most of them are just erring on the side of being sort of risk averse. They don't know what the regulations are going to look like, so they're extremely worried about how the U.S. government is going to end up treating them if they do offer them to non-accredited investors. So they're just being very, very cautious. And as a result, it doesn't really make much of a difference in the market.
So it's not official regulation at all yet, because none of this is regulated. They're just thinking, oh, this is probably the safer way to go about it.
How do I not get in trouble with the government in the future?
So where does MELD stand right now with regards to offering tokenized treasuries, and how does that work?
Yeah, so we're planning on offering tokenized assets, probably bonds first, and U.S. Treasuries in the second half of the year, 2024. We think this is going to be a major area, not so much with things like U.S. Treasuries, but with other types of sovereign debt. So you have a lot of countries that have much higher yield in regards to sovereign debt that are almost impossible to get a hold of by even normal accredited investors. So these types of assets and other things like, development projects, municipal bonds, corporate bonds, these are things that have very high yield. And they really have no access outside of institutional buyers at this point. So we want to be primary distribution for these assets. We will not tokenize. We'll work with people. We want to make it available, safe, and straightforward for people to be able to buy, sell, and trade them once they've gone onto the market.
Okay, the thing with the U.S. Treasury is that the risk of default is practically zero. But when you're talking about other countries here, what happens if there is a default there?
Well,
what happens if I own a token of another country, or even a corporate token that has a very high yield, but then there's a default? So what would that mean?
So one thing we can say is, the U.S. was just downgraded last year. So they're not perfect. Almost all of the countries in the ECB and the EU region are considered to be of the same quality as the US. So they're considered to be, AAA, no default. The thing about it is that, yes, there is a higher chance of default for, other countries or other sovereign debt, but it also comes with a much higher yield. So there is a direct correlation between the risk in which you're taking and the amount of yield you're getting. And so the important thing here is not to shield people from the risk. The important thing is to make sure people can take and look at, this tokenized asset and this tokenized asset and compare them apples for apples so that that person can make their own decision. This is where we see it. We don't see risk as a bad thing. We see it as a good thing, as long as it's very, very clearly labeled and everybody is, they know that they're getting into that risk. It's not just, magic money where you get a high yield for nothing. And so it's this is the nature of investing. And what we've seen, throughout the history of crypto is kind of the first line of education for getting normal people into the financial system. And so this is the next step in that journey for people to get a better understanding on how debt works, how sovereign debt works, how bonds work, all of these kinds of things. And I think RWAs are going to usher this in. And when it does, then you'll finally get to a point where normal, average, everyday people can get access to these extremely powerful instruments that currently only large institutions do.
Right. And that's a very valid point, that people have learned so much about a monetary system through things like Bitcoin. All of a sudden, people are questioning the Fed and how the whole system works in the first place. So it's a very valid point that you bring up there, Ken. But back to the MELD product here. How can I confirm that the underlying treasury is there? What in MELD allows me to feel a sense of security or safety that you have custody of this asset?
So the way that we're doing it is we have what's called a special purpose vehicle that holds the asset in it, or we have a partner that does. And then we take the information connected to that asset and we put it on chain. So that you can think of it as being audited, right? So if you hold gold in a vault, that vault is audited every month. You don't know for a fact that you have that gold there, but you have to believe in that audit. So in that same way, you have the auditing of these different types of assets, bonds or whatever it may be. And then that information is put on chain at a regular interval. And then you're able to see for a fact that this auditor has said that this is actually the case, this is the value of it, this is where it is, there's nobody else that has a claim on it, and this is where we're kind of signing off on it. So we're using the traditional instruments in the financial space in the same way you would in a normal asset. And we're just taking that information and putting it on chain and making it available to everybody. And
so who is doing the auditing in the case of MELD?
In this case, it's specific to an asset. So in the case of gold, then it's going to be an auditor, I don't remember the name of the auditor, that only audits gold and other precious metals. In the case of corporate bonds, they would be specializing in that. In the case of, for example, real estate in Switzerland, then they would be an auditor that specializes in real estate in Switzerland. So this is why we're not focusing on the tokenization, because these parts are very domain specific. We're focusing only on the distribution and making sure that the right people are able to do that and bring the data on chain.
Okay. Let's talk about what this means for the de-dollarization trend, which is a topic you and I have touched on in a previous conversation, and this broader idea that the BRICS and the BRICS plus 6, the expanded version thereof, are looking to move away from the dollar and trade in their own currencies. And let's bring it back to the US Treasury conversation. Do you see this potentially working against a de-dollarization trend if in a few years' time this product is more easily accessible and individuals across the world have an easier way to get into a fraction of a US Treasury? Does this help the dollar maintain a certain status? Does this in any way negate a de-dollarization trend to one degree or another?
Yeah, I mean, like we talked about after the BRICS conference, I think they lost their momentum, they lost their opportunity. The dollar is going to maintain and keep on maintaining its hegemony for the foreseeable future. I think that the dollar is kind of the target, or U.S. securities are the target for tokenization right now from what we've seen from companies. And so I think it's going to benefit the most in the short term. We haven't really seen the appetite from other countries to be able to tokenize their debt and get it into the hands of normal people as a distribution method. So I don't know if that's going to be a trend or not. So I think that, yes, it's going to be dollar, at least for the next 6, 7, 10 years, because BRICS they've lost their ability to organize, and their infighting is going to be their own sort of down, or their own down. Yeah.
That is certainly your perspective, Ken. I know that we discussed this before, and you said that the expansion of the bloc is potentially more problematic because it's going to be more challenging to get any kind of agreement and any kind of consensus. Some think it gives them more power, but we'll see how that plays out. But in the meantime, you're saying that it's still going to be the US dollar and US backed assets, US dollar backed assets that are going to potentially benefit the most from tokenization. With regards to the MELD platform, are you paying out or facilitating the payout of the yield back in US dollars, or how does that work?
No, so it's exactly the way it is in traditional assets. So whatever the instrument is being invested in, whether it's dollars or euros or yen, the yield gets paid back out in that same currency. So this way you're able to minimize any potential FX exposure risk. If you're investing in a dollar bond or US securities, then you get paid back out in dollars. If you're investing in a euro bond or a corporate bond from a European country, then you'll get paid back out in euros.
Okay. And it's all going to be on the MELD platform. So technically, with that payout, I could then go and buy a cryptocurrency of my choosing.
Yeah. So the idea is that the blockchain itself is the bank. So the assets are sitting on the blockchain, right? It's a ledger. So they're held on the blockchain. So at your discretion, because you're the only one that owns that asset, the only one that has control over that asset, you can convert it, you can sell it, you can move it back into a more secure asset, let's say you have a euro bond and you don't feel comfortable that the euro is going to continue to increase in value, you can immediately sell that bond, convert it into dollars, convert it into yen. And of course, you can also then use those assets and then go and, buy some other cryptocurrency like Bitcoin or Ethereum, MELD. But the real idea here is that you're in control of the asset. Mm-hmm. You have access to all of these different types of instruments that give you a yield. And depending on your investment approach, depending on your personality, your current financial state, you get to make those choices. Nobody else can make them for you, and nobody else can stop you from making them.
All right. Let's bring it back to cryptocurrencies. And we have seen a rally, a broad-based rally in the crypto market lately, mostly fueled by Bitcoin, and the Bitcoin rally gaining steam because of speculation that approval of a spot Bitcoin ETF by the SEC is imminent, most saying that it could happen even before the end of this year, even at the latest beginning of January. We saw that Bitcoin prices have crossed the 37,000 level for the first time since May of 2022. They've hit 38,000 on some exchanges. Depending on when we air this, we'll see the price of Bitcoin is. But basically, we've seen this big rally. And interestingly enough, Ken, it comes exactly a year after the big FTX collapse that saw Bitcoin tumble to 16,000. So quite interesting to see such a huge sentiment shift in just a year there. Let's focus, though, on what you think the likelihood is of this BlackRock spot Bitcoin ETF being approved. And I'm saying BlackRock because it seemed that ever since we learned that BlackRock filed for a spot Bitcoin ETF in June, the whole narrative changed, given that BlackRock is such an influential player, that it is the world's largest asset manager and does have a near perfect record of ETF approval. So the minute that we heard that BlackRock was getting into this game, that's when the sentiment shifted to think, oh, the SEC is probably going to approve this. What does Ken think? Where are you in terms of a timeline of approval, and if it's going to be BlackRock or BlackRock and several other approvals at once?
So the SEC has until the 24th of January to be able to give a verdict as to whether the application goes forward or it's rejected. So we'll know on the 24th. This is why we're seeing so much kind of Bitcoin getting priced into it being approved. BlackRock has had lots of ETFs. They've only ever had one rejected. And that one that was rejected ended up getting approved in the end. So they have, like you said, a near perfect record. And as a result of this, I think everybody sees that, they wouldn't be doing this if they didn't know that they were able to get it through the gate. And if you look at, there's some, since ETFs started, there's some 200 plus ETFs that have been created. The most funded ETF in the first 24 hours was the Bitcoin futures ETF. So I think what you're seeing is both the traditional institutions, they see that when these ETFs go live, they're going to consume a huge amount of Bitcoin out of the ecosystem. And it's going to be a huge boon for them, for their margins, for their value locked on their platforms. And it's going to be a big win for everybody else in crypto, because when there's fewer Bitcoin, then the price is going to go up and it's going to bring everything else up. So I think that it is almost inevitable if they were to be rejected, then yeah, I think that I don't think it would be so much of a regulatory problem. I think it would be a political problem. I think that politically, the SEC is not in a position to be able to say no to something like this.
Why do you think the change of heart, if you will? Is it the BlackRock that they got into the space?
Absolutely, 100%. It's purely because of, crypto is a forward-looking asset. And so people see this coming. They see that people are starting to accumulate Bitcoin because they know they're going to have places to sell it to, whether it's BlackRock or Fidelity or the other dozen ETFs that are in application. All of them will be, or most of them will be approved. The SEC can't simply approve BlackRock and then not approve these other ones. It would be a complete disaster
Yeah.
from the sort of management on their side. And so I think that they'll all be approved over time, and that is going to just change the nature of how crypto is looked at, how crypto is invested in. It won't affect any of the traditional sort of crypto people like me, but it will bring a lot of new money into it. It will bring all the institutions. It'll bring, lots of people that would normally not get access to it, that currently they have to buy MicroStrategies in order to get access to Bitcoin. Now they'll have a more formal way of getting into the asset, and they'll see the gains, at least in the short term.
Yeah, it certainly reduces the barrier to entry for a lot of people that don't want to go through the effort of, downloading a wallet or getting on an exchange and all that's involved there. Let's focus a little bit on the price momentum here, Ken. So you're saying the chances of an approval are what? Give it to me in percentage terms here.
I would say well north of 97, 98%.
Okay, that's pretty high. Okay, so 97% chance of approval.
Yeah.
What do you expect when we get the news? Is it a rally on the news of the approval? Sell on the rally on the rumor, sell on the news? What do you expect?
Yeah. So personally, pretty much all the smart people I know are saying that people will sell the news. So there'll be a downturn in the price and then a consolidation, and that consolidation will then mark the beginning of the next bull market. The challenge that I have is that pretty much everybody I know is saying that, and everybody I know is waiting for that to happen in order to buy some more Bitcoin. And as a result, I don't think it's going to happen. I think that when BlackRock gets approved, then everybody will get into full swing in buying Bitcoin in preparation to be able to sell it on to their own ETFs. And so I think it's just going to be a huge injection into the market. There might be a downturn, but I don't think it will be what people are saying, which is kind of, immediately after the BlackRock announcement, then the price will go down, we'll get a retracement, and then we'll sort of start to move up. I think there might be something maybe a month after that. I do believe that there is going to be a downturn. I think the euphoria will burn off after maybe a month or a month and a half of the ETF. But once that happens, then I think we're well underway for the next bull market.
All right. And clearly there are other, variables involved, like the broader macroeconomic picture, the broader geopolitical picture. But more or less, do you have a price forecast of where you see Bitcoin at, say, middle of 2024, keeping in mind we also have the halving event in April?
Yeah. So middle of 2024, I don't think we'll see anything spectacular. We might see $75,000, $80,000 Bitcoin.
That would be a new all-time high. That's pretty spectacular.
Yeah. But I think 2025 is going to be the spectacular year. That's
Tell us, how spectacular is 2025 going to be?
We're looking at north of 300,000 for Bitcoin.
North of 300,000 for Bitcoin by end of 2025?
We're forecasting right now sometime in September.
Why September of 2025?
Just based on it's surprising how similar the previous bull runs are, the charts are, to the current timing. And so based on the fact that they're really kind of following the same pattern, that's the best forecast we have to when the peak of the next bull run is going to be. Like you said, if there's macro events, that's going to obviously make some difference. But based on these repeating charts, and what we're seeing of the run-up, it'll be sometime around September that we'll see the peak of the next bull run. And I think that with all of these ETFs coming into full swing, we're not going to shake off any of the problems we have in regards to inflation and, the fact that we have way too much money in the system. And I think that people are going to see the dollar going down in value and the perceived value of Bitcoin going up. Obviously, it goes up partially because the dollar is going down. And then just the massive accumulation of Bitcoin into these ETFs. I just think it's going to be, they're just going to suck all of the oxygen out of the air for Bitcoin, and it's going to cause a almost like a panic level rally.
$300,000 Bitcoin by September of 2025, according to MELD's models and forecasts. Now, help us understand why you have these models and forecasts and how that links in to your yielding and staking facilities and the risk profile that you have for specific cryptocurrencies.
Yeah, so MELD offers the ability for people to buy things like Bitcoin or Ethereum and then hold it in the long term, but become liquid as a result of it. So if you have Bitcoin and you don't want to sell it, then you can borrow against it, and that becomes debt. So you're not incurring, capital gains tax or any kind of tax event. But in order to do that, we have to have risk models for each of these different tokens. And those risk models take a look at the historic volatility of the token and the market, what the current sort of token looks like, whether there's lots of people trading it, whether the amount of the token in the market is a lot or very small. And then those numbers are crunched into our risk model. And it determines, okay, in the case of Bitcoin, you can borrow 50% of the value. In the case of, a stable coin, you can borrow 85 or 90% of the value. Or in the case of a smaller token, you might only be able to borrow 20% of the value because it's not as mature, it's not as big, it's more risky. So these models we use we almost primarily use them from historic, but we also look at the future when it comes to what the market's doing so that we can have at least a vague idea of how to prepare when it comes to like insurance or risk mitigation in the case of some of these different events.
Right. So let's talk about the rally that we're seeing for other coins, because as you've mentioned, you offer this product for a range of cryptocurrencies. And the Bitcoin rally has fueled a broader crypto sector rally. One of the standouts, Solana. Solana price has skyrocketed 130% in 30 days, hitting an 18-month high at $50. Speculation out there for Solana to hit $100 next, that there's still a lot more room in that rally. Do you have any insight on Solana, and according to your models there, Ken?
Our models are well north of 200 or 250 for Solana. I mean, Solana is such a peculiar character, right? Because it's the only blockchain that has maintained its kind of fame or popularity for two bull markets, right? Most of these blockchains, they end up having this, huge success in one bull market, and then they kind of lose a lot of their momentum. But Solana was north of 200 in the last bull market. So we fully expect it to go much farther than what it did in its last bull market. So yeah, well north of 200. I would not at all be surprised to see Solana at 350 at all.
Over what time period, more or less?
Yeah, 2025.
2025. All right. So a lot of room left in the Solana rally. What are your thoughts on Ethereum?
Ethereum is interesting because it tends to be more kind of serious. It's less speculative. It's more of the kind of grown up. It's the base layer for everything. So I think that Ethereum obviously will do very well. It'll probably run parity to Bitcoin in that sense. I would like to see Ethereum do a lot better. I would like to see it being recognized for what it actually is, which is this kind of foundational layer for a lot of what crypto is built on. But it seems to be kind of being held back because of, I guess partially it's because it has such a vibrant ecosystem that people have so many different assets that they can invest in, that it kind of draws some of that liquidity that would normally go into Ethereum. But Ethereum will do great. I think the big challenge is going to be gas prices. I mean, we're already seeing yesterday, gas prices at huge levels, and we're not anywhere near a bull market. And so, I mean, that's going to be the big challenge, I think, going forward is, as we move forward, having gas prices of, $100, $200, $500, $1,000, that's really going to be a crippling thing as we go.
Let's bring it back to the tokenization conversation then, Ken. Which blockchain do you anticipate to be the primary one for all of the real world asset tokenizations, or the majority of them? Is it most likely Ethereum?
No, I think that the idea of a primary blockchain, I think that ship has sailed. You have, I don't know how many now, 7, 10, 12 layer 2 effectively blockchains that sit on top of Ethereum. You've got, MELD is a blockchain. You have Avalanche. You have Solana, which is doing great. So I don't think it's so much about the blockchain. The way we're looking at it is, bridging is going to be a key component where people are going to, instead of look at, I'm going to be on this blockchain, I'm going to take this great thing from this blockchain and this great thing from this, and I'm going to use them how I want to use them.
Right.
So it's a much more kind of cherry picking approach. And it means that, a lot of these blockchains are going to have a very, very strong future.
Right. Is there any blockchain and token linked to it other than MELD that you are particularly optimistic about, other than the Solana and ETH that we just chatted about?
I'm very optimistic about Avalanche. I think Avalanche has fantastic technology. And I think there's a handful of smaller blockchains that have really, really interesting technology behind them that are just starting to emerge. One of them is called 𝗠𝗘𝗟𝗗. I can't think of the name of the other ones, but now is the time that you see lots of new and super innovative technology being debuted into the space. So if you're interested in blockchains and the layer 1 blockchains, it's a really dynamic and vibrant space right now.
All right, Ken, I now want to get your thoughts on a report that shows that one of the world's largest Bitcoin holders is none other than the United States government. The US has over 200,000 Bitcoins, and at a price of around $37,000, that's about $7.4 billion worth of Bitcoin. And this is according to a report from crypto firm 21.co. And they analyzed data on public filings and data available on public sources. And it says that it estimates that the US government has 200,000 Bitcoin in its possession, and that is on the low end of the estimate. Now, the government has this not from buying Bitcoin, but from seizing Bitcoin, mainly from cyber criminals or darknet marketplaces, and through crackdown operations on various nefarious parties and activities. 3 of the recent largest Bitcoin seizures have been the Silk Road seizure of around 69,000 Bitcoin in November of 2020. We also had the Bitfinex hack seizure of around 94,000 Bitcoin in January of 2022, and the James Zhong seizure of over 51,000 Bitcoin in March of 2022. So US government has all these Bitcoin, and they're stored offline in encrypted hardware wallets. And this is under the jurisdiction of various federal departments like the Justice Department, like the IRS. And the handling of the Bitcoin by US government is, of course, very closely watched by crypto traders, because any significant sale of a big chunk of this Bitcoin could influence Bitcoin's price and the broader digital asset market. Now, it is important to note that the US isn't, in theory, holding on to these Bitcoin for potential profit or as a strategic investment. It's the accumulation as a result of seizures and the legal processes that can take some time to unwind. But it does raise the question, several questions, in fact, but it does raise the question, including what happens when the US starts to sell off the stash. So, Ken, what do you make of this general report that the US has 200,000 Bitcoin?
So this is a kind of, it falls under traditional regulations, but it's kind of new territory for them. So what has happened in the past is these assets have been seized and then they've been put up for auction. So famously, Tim Draper, during one of these auctions, he bought 30,000 Bitcoin. I think it was in 2014 or something like that. In the sense that, they didn't really know what they were auctioning off, and he got a great deal for it. So they've auctioned off Bitcoin and other types of assets. But in recent sort of last several months, what they've been doing, instead of auctioning them off, they've been selling them on to exchanges. So they've been handling them in a bit more of a responsible way, so that they're not sort of dumping them into the market. They're actually they're selling them to these exchanges, which then the exchanges can then put them into the market in a way that's not going to be massively disruptive. So, Bitcoin is an asset class. right? It's a formal asset class supported by, the BIS. So the US can handle it as an asset class. They could keep it if they wanted to keep it as remuneration.
Well, that's a very interesting point that you touch on there, because this report has, the conspiracy theorists on sort of coming out and making some very valid observations. One theory out there, Ken, is that, this is the US holding this. They'll maintain the hold over these Bitcoin in the event that at some point there is some kind of, Bitcoin becoming a legitimate reserve asset for governments. So that this is a sort of game theory way of having the US positioned to at least say that they have Bitcoin and have Bitcoin should that become a central bank theme and a central bank trend, without saying we have Bitcoin, which would then in a way take away from the value of the dollar, but allows them to still have Bitcoin. But that it points to acknowledgement of a broader trend that there could be some sovereign recognition of Bitcoin as an asset, even by the US. What do you say about that?
I think that the only chance of anything like that happening, and I think it's very much conspiracy theory, is through political means. If you end up getting political party in power that, comes into power as a result of their platform on Bitcoin or on cryptocurrency, and then they want to push their agenda through, it might happen. But I mean, the way that the US government handles it is very, very much the exact same way they handle other types of assets, whether it's, bonds or other types of equities. So they have a lot of strict regulation that they go through. They have, chain of custody, which is, heavily monitored. So I don't think that there's anything nefarious going on here. I think it's almost business as usual for them. Whether they can actually go and if they having these assets and, somehow bringing them onto their balance sheet, there might be a method for doing that. They probably do this with dollars that are seized. But I don't think that anything out of the ordinary is happening. It's just, almost coincidental, the fact that, a lot of scammers are in the crypto space. And so the US is going to, by default, is going to get their hands on a lot of these assets because they're catching bad guys.
Right. Okay. As I said, there are those that would like to think that this is the way of the US to hedge against a future Bitcoin standard, or that may or may not come along with a future gold standard, that they're at least positioned as a central bank potentially having some Bitcoin. That's the one theory, Ken. The other theory here, which we'll have you weigh in on, is that the US government is planning on dumping this all at once and impacting the Bitcoin market negatively to effectively take out the threat of Bitcoin at some point.
I don't think that they have enough Bitcoin to do that. I mean, there's a lot of people that have a lot of Bitcoin. Yes, it would probably affect the price of Bitcoin, but I think that it would be absorbed so fast. So no, I don't think that. I think that the idea, you have the same theory about China and U.S. securities, this ability to kind of dump on U.S. securities to sort of attack the U.S. I don't think that 200,000 Bitcoin is going to make a huge difference when it comes down to it.
That's what we know of.
Sorry?
Okay, I said those are the ones we know of, but okay.
Sure.
But point taken. So you're not considering this as a way to significantly manipulate the price of Bitcoin. Could they even sell it all in one sitting if they wanted to? Are there regulations or some kind of processes in place?
As long as it went through the correct jurisdictional channels, they could hold it and then sell it all at once. I doubt that they would do that. It's probably the 200,000 has probably come in at different times, so it's going through the system at different times. But I'm sure if they wanted to, they could probably come up with some sort of legal precedent to do that. But I don't believe in any of these kinds of conspiracies in this sense. I think that it's just the U.S. government is doing what they do on a daily basis, the way that they do it, and they're following the rules that they've set for themselves, and they're going through the process. It's nothing more scary than that.
All right. So even though it sounds dramatic, Ken, that the US is one of the world's biggest Bitcoin holders. It's a big nothing burger for the conspiracy theorists out there, is what you're saying.
That's what we think. I don't think the U.S. government is coming after.
All right. Well, we had plenty of real meat and real substance in this conversation, even if that one is a nothing burger. Ken, as we wrap up, your final thoughts on what the next exciting product from MELD that we can expect to see.
Yeah, so I mean, we're at the end of this year, we're going to be launching staking on our blockchain. So you'll be able to take your MELD tokens and get 8% yield on that. So that's the big thing. And then come the new year, we're going to be launching our lending and borrowing and our banking product. So the first quarter of next year is going to be super busy for us. And we're super excited about the fact that the bull market has kind of started to warm up again, just in time for us to get our product into the market.
Right. And these products available in the US?
The DeFi products are available in the US. The banking products will not be, unfortunately, not until the US has regulations that make it very clear as to how we can operate.
All right. Well, thank you for giving us some clarity on a lot of these topics and a lot of these issues. Always a pleasure chatting with you, Ken. And just a full disclosure to our audience, MELD has been a sponsor of some content here on Kitco, but we're always happy to have you weigh in on broader topics and catch up with you. Ken Olling, thank you so much.
Thanks, Michelle. Nice being here.
And as always, thank you for watching. From me, Michelle Makori, and the rest of the Kitco team, we will see you next time. And if you're watching us on YouTube, make sure to subscribe.